Hi, I'm Keon, a research analyst with Lipper, and I'm here to talk to you about fund flows for the week ended Wednesday, April 22nd. Let's start by taking a quick look at last week's market activity. The S&P 500 was up 0.1%, while the Dow Jones Industrial Average was a little bit off, down 0.4% for the trading ended Wednesday, the 22nd. News out of China drove the markets last week. On Friday the 17th, China announced that it would start to permit stock lending in regards to short selling. And also they would grow the number of companies that could be shorted from 900 to 1,100. As you can imagine, this made investors nervous around the globe, and the Dow and the S&P responded accordingly, retreating 1.5% and 1.1% respectively that day. The very next trading day, Monday the 20th, China came out with some more news. The central bank announced that it would be cutting its reserve requirement for its banks by 100 basis points. This was on the heels of some weak first quarter economic activity. The move was not unanticipated, but just the size of the move was unexpected. This was the largest cut by China's central bank since the global financial crisis in 2008. And in response, the markets bounced back that day. The Dow and the S&P were up approximately 1% each on the day. All right, let's turn our focus back to fund flows now. Overall for the week, we saw net aggregate inflows of approximately $3.4 billion. This aggregate data includes both mutual funds and ETFs. This broke a three-week trend where we saw net outflows in each week. Let's move on now to our macro groups. Equity mutual funds took in $2 billion overall for the week. Taxable bond mutual funds had net inflows of $2.9 billion. Muni bond funds saw $500 million flow into their coffers, while money market funds once again had net outflows, this week a little bit more reduced, about $3.8 billion. Let's take a closer look at each group now. Starting with the equity mutual fund group, as I said, approximately $2 billion in net inflows last week, which broke a streak of 4 weeks of outflows for them. Taking a closer look overall, we saw non-domestic equity once again leading the way with $3.8 billion in net inflows, while domestic equity funds had $1.8 billion in net outflows. Took a deeper dive with this data today, looking at the non-domestic equity, and found that the lion's share of the non-domestic equity is attributable to the international equity mutual funds. And looking back historically for this group, found that international equity mutual funds have had positive net inflows each year since the global financial crisis in 2008. Conversely, domestic equity mutual funds have only had 1 year of positive net inflows, 2013. Every other year has been a net outflow for the group. Moving on now, let's take a look at the equity ETF group. For the week, they had $400 million in net outflows. The two biggest outflows coming from iShares Core, MSCI, EFA, which saw $730 million leave their coffers, and then followed by the Financial Select Sector SPDR ETF, which had $580 million leave. Conversely, on the buy side, Deutsche MSCI EFA Hedged ETF had the largest inflow with approximately $1 billion. Moving on now to our taxable bond fund mutual fund group. For the week, they had net inflows of $2.9 billion. This marked the 17th consecutive week of net inflows for the group and put their year-to-date total at $27 billion of net inflows. On the week, Core Plus bond funds and core bond funds saw the highest net inflows with approximately $900 million each. Let's take a look at the ETFs on the taxable bond funds now. Net inflows of $2.1 billion for the week. 3 iShares Treasury products led the way here. They had the largest inflows. The 1 to 3 year, the TIPS, and the 7 to 10 year took in approximately $800 million, $720 million, and $140 million respectively. Conversely, the largest net outflow also came from an iShares Treasury product. The short Treasury ETF had outflows of $140 million on the week. Moving on to our Muni Bond Fund group now. The group took in $491 million for the week. This broke 3 consecutive weeks of net outflows for the group. National munis, as usual, paced outpaced the group with $472 million in net inflows, while single-state munis took in $19 million. Moving on now to our last group, money market funds. Once again, net outflows for this group, $3.8 billion left last week, the fourth straight week of net outflows for money markets, bringing their overall net outflows for the year to date to approximately $120 billion. In this week's activity, we saw that money market funds and U.S. government money market funds had the largest net outflows respectively at $4.1 billion and $3.8 billion. That wraps up this week's report. If you'd like to take a deeper dive with the data, please join us at our website, www.lipperusfundflows.com. And again, please join us again here next week where another Lipper analyst will be talking to you about last week's fund flows activity.